If you open the news and everything is red, arrows point down, charts are falling, and experts look worried, congratulations, you've caught the moment. A moment when the stock market puts on a financial roller coaster in just 3 days. So, what actually happened? What fell, why it fell, who's to blame, and most importantly, what do we do now? And why is Trump suddenly in the middle of all this, and why does Wall Street start trembling at the mention of his name? Make yourself comfortable. We're about to break it all down. What exactly fell? The S&P 500 dropped over 6%. Nasdaq, nearly 8%. Dow Jones, down 5.3%. Tech giants took the hardest hit. Apple lost over $200 billion. Microsoft, down 9% in just 3 days. Nvidia, Amazon, Google, all in the red. The financial sector also couldn't handle the pressure. Bank stocks are under pressure again. Even gold took a hit. Crypto. Bitcoin, down 12%. Ethereum, down 15%. Altcoins. Even worse. Panic doesn't care what it sells. Everything gets dumped. When fear hits, people run from everything. What triggered the drop? The reason. A familiar phrase, trade war. The US announced new tariffs on imports from China. And not just on a few items, but a whole list of strategic categories. This triggered an immediate reaction from China. Mirror tariffs, threats to restrict rare earth exports. Even hints at tough action against American tech companies. Markets took it as the start of a new escalation cycle. Nobody wants to go back to 2018. The first round of the trade war already caused a market crash. What are tariffs and how do they work? A tariff is a tax imposed by a government on imported goods. Imagine, you want to buy a TV from China. It used to cost $500. But the government adds a $100 tariff. Now the TV costs $600. Bottom line, consumers pay more. Companies face higher costs. Profits go down. Demand drops. And the economy slows down. How does the market react to fear? The market isn't a robot. It's a living system reacting more to emotion than facts. When there's a threat, it doesn't wait for confirmation. It starts running. Stocks fall, algorithms kick in. Algorithms sell even more. The drop accelerates, volumes grow. Investors panic and dump everything. It's like a snowball, a small push can take out the whole mountain. And what about crypto? In theory, yes. In reality, not really. Bitcoin isn't immune to panic. To many investors, crypto is just another risky asset. When the market shakes, they sell both stocks and Bitcoin. Many entered crypto with borrowed money. During a crisis, debts need to be paid. And to repay, they sell. In times of stress, crypto falls with everything else. It has no immunity, only higher volatility. So what does Trump have to do with it? And here's where it gets really interesting. Trump isn't just some background noise. He's back on stage. His campaign is gaining momentum. And his main message, bring back the tough America. Protect the market. Protect the industry. And above all, go hard on China. And the market remembers. In 2018 to 2019, the trade war already triggered crashes. Now, even if Trump isn't president yet, his influence is already real. Because investors think ahead. His words shape expectations. And expectations shape the market price. What should the average person take away from this? First, the stock market runs on fear. Sometimes more than on facts. Second, most crashes aren't catastrophes, they're corrections. Historically, markets always recover after panic. Because in economics, it's not the moment that matters, it's the trend. Third, don't react emotionally. Those who sell at the bottom usually lock in their losses. Losses they could have simply waited out. So what should you do? Don't panic. If you have investments, don't make decisions on nerves. Don't sell without a reason. A crash isn't a sentence, it's an opportunity. Reassess your strategy. If you've put all your money in one stock, think about diversification. Got spare cash? Consider buying discounted assets. But only the ones you truly understand. Learn from crises. This is the best time to understand how the market works. Markets don't fall because of disaster. They fall because of the fear of disaster. And if you understand that, you're already a step ahead.